Golden Rule Radio is brought to you by McIlvaney ICA. ICA has been helping people take delivery of precious metals and find storage options for decades. They have also helped thousands of investors with their precious metals IRAs. Call ICA today for your free portfolio review at 800-525-9556 or download your free report online by clicking the link in the video description to learn how you can double your gold and silver ounces even within an IRA.
Welcome back to Golden Rule Radio. We've had some good action in the gold price in the last couple of days. There on Tuesday, gold pushed all the way down to almost 1,800 and bounced there. And that had been after it had consolidated here for a few days around 1,840. And so yesterday, Tuesday, pushed all the way down to around 1,800. Today, Wednesday afternoon, it's pushing 1,870, which is about 4% off that 1,800 number. So good action on gold. And really the question I think, Miles, I want you to address today is this it with gold? Is that the correction we were looking for? I know that we called 1,840. It hit that a couple weeks ago. And then we've had this intraday decline yesterday and bounce hard off it. And we're rising today. Are we going to see another chance to buy lower, or was that it?
Sure. You guys know me. I'm certainly always looking for an opportunity to increase my position at a cheaper price because long term we know where the price of gold is going. So I was looking back at some charts during the previous inauguration, and it's kind of hard to make a correlation here because we were coming off the ultimate bear market bottom in December, but obviously starting January of 2016, that's when we started to see gold climb again. And we've been seeing upwards momentum in gold doubling in price since those December 2015 lows. Certainly, it's not unreasonable given the political instability and change that's taking place now and some of the concerns on both sides of the aisle where the price of gold goes long term. I don't know if there's anybody in this room that has any belief that we're going to see anything but increased inflation and we're going to see gold at least long term continue the trend. Now, if you were paying attention there, you realized I just completely avoided your question, and that was short term. What do we think the price of gold is going to do? So arguably, I'm going to say we need to see gold at least back above 1,900 and start stair-stepping up from there. But ultimately, you've got to start putting in higher prices long term. Now, we did put that bottom in back on November 30th. We had a nice jump up. We came back down, as you just alluded to, here on January 18th, a couple days ago. We put in a higher low, and unless gold continues down within the next few days, it is very likely that November 30th bottom may have just been our short-term move, which was relatively shallow on the grand scheme of things.
You know, the Wall Street Journal supports what you're saying. They came out and said the likelihood is that both gold and silver have bottomed, and they're now calling gold and silver the inflation trade. So for mainstream media to pick up on that and say that it's now the inflation trade, you're right. I mean, from the macro long term, inflation is the expectation, and they're not alone in that.
That's a good point, Tori, with the Journal bringing that to light for many investors to read, because I think out of all the investors out there, I think there's such a small percentage of them who even own actual gold and silver. And so things to come are, I think, another huge wave of people who are paying attention, market participants who don't own gold and silver. We're getting a lot of calls about that with people who never entered into the metals market. Now they're interested. So I think the next thing to come is a big wave of market participants coming to the metals market for the first time, second time, and buying physical metals or wanting to. And I think that drives prices higher. So that's gold. We'll see where it plays out. We'll be watching it closely. Silver, Miles, what do you think?
Yeah, looking at a market I'd love to see more market participation in, of course, is the silver market. Now, unlike gold, silver does actually look like it has started to step up. We put in a low back in September. And just like gold, we did put in a low on November 30th, but it was actually a higher low, and we keep putting in these higher highs and higher lows, and it's very possible we may see that again. Now, I think silver still has the potential to come back down for a third touch on this floor it's making from that September and November low, putting us down somewhere in the $22, $23 range. And I know my song for the last couple weeks has been, it wouldn't surprise me to see precious metals actually continue to inch down at least for the next couple weeks this spring. So I haven't completely abandoned that, but I think the longer this trails sideways, the higher and shallower those corrections end up becoming.
Well, I've got to put you on the spot with platinum too before we leave the white metals. There's just a ton of activity in that as well. Will you take us through that chart?
Yeah, platinum to me is compressing pretty hard here over the last couple days since about the first week of January, but we're compressing up against those, 4-year-old highs that we've been talking about, with platinum now up over $1,100. In my opinion, I think we're in breakout territory for the platinum price. I would expect to see, even though I continue to argue I think gold and silver might still have a little bit of downwards pressure, I don't think platinum does. Platinum is bumping up pretty hard against these pricing going back to around July, August of 2016. And then really there's nothing, once it gets above that, nothing stopping platinum until you get back up to around 1,500, which takes us back to pricing July of 2014, a couple years prior. So platinum to me looks like it's pushing real hard. It is finding some resistance. We've put in 3 declining highs now, but the lows are coming up a lot faster than the highs are coming down. So once we break out of this short-term pennant pattern compression, I really am feeling like platinum's about to have a breakout up.
Yeah, and it could do what palladium did a couple of years ago. It just moved on its own. It became its own market and just kept going, regardless of whatever the other precious metals were doing. And, typically, obviously, we think of the metals moving in tandem, up, down, pretty much together. But I think you're right, Miles. Platinum could just go it alone, as you say.
Right. And not always. A lot of people also make the assumption that if the dollar's up, gold's down, vice versa. If stocks are up, gold's down. But all of these markets are interplaying with each other. And you do see money shifting hands, sort of like where the financing charges are at a car dealership. You're paying for it one way or another. It just kind of shifts around on the ticket. And you're seeing that with these markets too. I mean, with the equities market climbing, platinum as an industrial metal climbing, palladium as an industrial metal climbing, even gold and silver this last week have been climbing.
Yeah, today's a great example of that, right? Strong rally day, whether it's an inauguration boost or whatever, but strong rally day, both in the equities markets and in the precious metals markets, as we record today on Wednesday.
Right. And the next day or two, it'll be good to see if that is just a little short-term reaction to political news, or if we did put in that second higher low in gold, which is going to continue to push the rest of the metals up going forward, if we put that in last week.
I think a lot of that price action, too, is just what came out of the speech that Janet Yellen gave at her confirmation hearing. She's the expected Treasury Secretary, despite a lack of experience that way administratively, certainly an academic, but we've seen quite a bit of rallies, not only yesterday, but today as well. And she's making the case for another sweeping economic aid package. Now, we'll call him President Biden now, officially today, has also talked about increased stimulus. And if his proposal's enacted, it would, if we take into account the $900 billion that just was put into place in December and the previous measures, that's going to add $5.3 trillion to our deficits. Right now, that's according to the Committee for a Responsible Federal Budget. That's not some random fake news here, but that's a staggering 25% of gross domestic product. But she said that the government needs to act big. Those are her words. And that delayed or inadequate support would lead to a more protracted economic recovery and cause a lot longer term damage. So this is going to be just like what we assume. This is print, 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 stimulate, 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 for the sake of trying to get the economy really rolling. The other things that she said that I think are important for our listeners to understand is...
Yeah, I was about to call you out on this for not saying it yet.
Well, there's a few things.
There's a lot there.
Because, that was a lot there. And to us, that's probably the more important point. But I think without knowing exactly what you're about to say, I'm pretty sure I know what you're about to say. And this is probably the more interesting point.
She's fairly Keynesian, would you say?
Yes, fairly Keynesian. I think
as long as she has control over the inflation.
Oh, well, and that's...
You can be as Keynesian as you want to be if you're the one in charge.
And she is, right? And she's got a partner in crime, if you will, in that regard when it comes to the Federal Reserve. So you're going to have a spendy president with a spendy Congress and a spendy Senate, along with a Treasury Secretary and a Federal Reserve Board that all see eye to eye that way. But what she said, and I'm going to get to a few things, but one is it's very important that corporations and wealthy individuals pay their fair share. And so on top of the spending, you're going to get this framework for a tax policy that includes a much steeper tax on higher income earners along with a hike on the corporate tax rate. So be prepared for that and see what economic effect that has. Saying we need to invest in infrastructure. She said the interest rates are staying low for a long time, to your point. And these are my two key takeaways. One, the United States will not be seeking a weaker currency to gain an advantage. Like, I fell out of my chair when I saw that. That's a complete reversal, first of all. Secondly, coming after cryptocurrency and digital currency, and she specifically names Bitcoin. Is that where you were going, Miles? Am I on the right
definitely
track?
the more interesting one.
It's crazy. She's suggesting curtailing cryptocurrencies in general because here we go, just like cash, right? They're being used for illicit activity and money laundering. Do they now have a target on their back? What do you guys think?
So from the Fed's perspective, you're saying that anything that isn't a Federal Reserve note is most likely being used for illicit activity. Is that correct?
I think that's what they're saying. Something like that.
Yeah, it is about the competition. You want to be able to control and bring everybody into the same system. And if things like gold allow you to escape that system, that's why they've never really liked it. If things like digital currencies allow you to escape the normal system, I am not surprised by these words. What I'm surprised about is how long it took for those words to leave the mouth of a Treasury Secretary of the United States. I quite frankly expected it years ago, and in ignorance, quite frankly, obviously I was wrong. But here we are, we're hearing these words. And for the sake of those who own the digital currencies and cryptocurrencies, obviously we hope this isn't the case. But you still have the alternative in gold. If what I hear is accurate, then you have a much greater need to have privacy of your investments. And where's the better privacy than physical precious metals?
Yeah, and I'd say that there's got to be an agenda behind Yellen being the Treasury Secretary, as well as the same type of thing with Lagarde going from the IMF over to the ECB. I mean, think about those moves. If she's not upon either one of them, then wouldn't somebody else come in with a resume as good or better than theirs? You know, Yellen shifting from the Fed directly over to the Treasury, Lagarde shifting from the IMF to the ECB. Come on. Is there not someone else that could have filled that role besides somebody who's already in bed with whoever's in the background with the agenda?
Thank you. How about Gary Gensler of Goldman Sachs now is going to head up the SEC? Are you kidding me? It always has to be a Goldman Sachs, right? Who, by the way, just had an 18% better fourth quarter year over year than 2019, and that's in a COVID environment. But here we go. Here comes the entrenchment, right? To your point, Robert. Yeah, get ready for Gary Gensler overseeing the SEC.
Yeah, there's obviously an agenda there, not only just with the Treasury and our system in monetary, but other systems, I think. So fun things to come.
Well, what's that old saying? What's the definition of insanity? Trying the same thing over and over again, expecting different results. I don't even think they're expecting different results.
No,
why
would they?
They know exactly what the results they're expecting are. And the dollar is following, down 13.5% since March of last year. So it's not unreasonable that we're seeing the exact track record play out that you would expect to see given the circumstances.
Yeah, to circle back around, privacy, printing, stimulus, it's all coming to a neighborhood near you that ultimately results in greater inflation than we have likely felt in our lifetimes. So the end game is tough to predict in a timing standpoint and enormity, but it's just shaping up to not be pretty.
We'd be remiss if we didn't mention all-time new highs in the stock market.
Well, that's what stimulus gets you.
Yeah. Stock market likes good news. It likes bad news. It's really hard to tell when that type of bubble is going to come to an end, but this year's one to be very cautious about being long equities.
Yeah, but the stock market is also still stuck in kind of the same linear trading pattern. So you're not really seeing breakout. You're just seeing, I would argue, kind of a manipulated growth within a trading range. And it will be interesting to see if the stock market actually can stand on its own 2 feet when it's already up over 30,000.
Well, Europe needs the same thing desperately, and they're facing a really bleak 2021. But ironically, what they're working to develop is a digital euro. So that's the news now coming out of the ECB, is they're blessing a digital currency. So maybe that's what the Fed is doing here, is get rid of all competitors so you can roll out an American version of a digital
dollar.
Currency. There you go.
Yeah. Why would you have Bitcoin when you can have bit dollar? So again, in this time where a few things are certain, and I think it's fair to assume a couple things going forward with the market. We definitely encourage all of our listeners to get in touch with one of the advisors here at McIlvaney ICA and help build and secure your precious metals portfolio in a way that works best for you and your family. If you'd like to speak with Robert, Tori, myself, or one of the other advisors here, you're welcome to give us a call at 1-800-525-9556. You can also find some additional information on our website at mcilvaney.com, on Twitter at ICA Gold, or Facebook at McIlvaney Financial.
Thanks for listening. Have a great week.